Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the fourth quarter of 2022, and that stock is Chipotle. And we can see that over the last 5 years, this stock is up over 400%, completely dominating the rest of the market's 55% return. And over the last year, they're up 6%, beating out the rest of the market's loss of 8% over the last year. So they're doing pretty well. And so in this video, I'm going to look into some of the recent news that's come out surrounding Chipotle. I'm going to look at their financial statements to get a better understanding of their earnings growth. And then I'm going to use a discounted cash flow model to figure out the intrinsic value per share for Chipotle so we can know if this is a good price to buy into the stock from a value investing perspective. And so right here, we can see they point out that Silver Spring recently got a Chipotlane. And Chipotlane is essentially a rollout of digital kitchens by Chipotle. And we can see right here, this is the second digital-only restaurant they've released in the country in Silver Spring, Maryland. Chipotle is essentially an outlet drive that has no dining room. It's a lot smaller than a traditional Chipotle restaurant and has no frontline staff preparing customer orders. Basically, customers can just make digital orders on the Chipotle app or through the website, and they can just walk right up or go through the drive-through window and pick their food up right away. They don't have to wait in those long drive-through lines or look at a menu, because in order to get food from a Chipotlane, you have to order before you even get there. So this eliminates drive-through lines and just makes it a really seamless and easy process for customers to get their orders. And so we can see the first one that they opened up was actually in Akron, Ohio. And so they're rolling out these Chipotlanes, and this is a new strategy for them to try to gain market share in the fast food industry. We can see right here, this is their balance sheet comparing 2021 and 2022. During that time period, total assets increased from $6.6 billion to $6.9 billion. And we can see most of their business is financed by liabilities. They have $4.5 billion in liabilities and $2.3 billion in total shareholders' equity. Retained earnings increased pretty substantially by almost $1 billion from $3.9 billion to $4.8 billion over the last year. So that definitely gives them a lot more money that they could use to reinvest back into the business or distribute to shareholders. And then right here on page 34, we can see their income statement. They actually had pretty good revenue growth over the last year. $7.5 billion in 2021 up to $8.6 billion for 2022. So that's an increase of 14% year over year for their top line revenues. And then for their net income, we can see that increased from $652 million to $899 million. So that's an increase of 37% for their bottom line net income. So that's really good growth for Chipotle year over year here. Lastly, right here, we can see on page 36 their cash flow statement comparing 2020, 2021, and 2022. For 2022, operating cash flow came out to be about $1.3 billion, up from $1.2 billion year over year. And then we can see they acquired treasury stock amounting to $830 million in 2022, which is up from $466 million in 2021. So they are returning value back to shareholders, and we can see their cash flows are increasing, earnings are increasing. All in all, it's been a pretty good year for Chipotle by looking at their financial statements here. And so right here, this discounted cash flow model is going to help us figure out the intrinsic value per share for Chipotle. Yahoo Finance is estimating that the company is going to grow at around 24% compounded annually for the next 5 years. They had around $1 billion of free cash flow in their most recent full year. They have a net debt position of $2.8 billion on their balance sheet after subtracting their cash, and they have around 27 million shares outstanding. That puts their estimated intrinsic value per share at $1,055 per share, which means that at the current share price, they're not trading below intrinsic value per share because they're trading at $1,685 per share. So based on these current projected growth rates, they are currently trading at a price that's above the estimated intrinsic value here of $1,000 per share. Right here, I compared them to their competitors, McDonald's and Yum Brands. We can see that in comparison to two of their main competitors in the industry, they're not doing that good from a financial ratio perspective. McDonald's is doing the best with their 56% gross profit margin and 26% net profit margin. We can see Chipotle is trading at the highest price to earnings ratio at 50 times earnings, And they also don't pay a dividend, whereas McDonald's pays a $5.66 per share dividend. So if we were going to look at them from a competitor analysis perspective in their industry, looks like McDonald's is doing the best, not only in profit margins, but also in dividends. So you'd probably have to give it to McDonald's ahead of Yum Brands and Chipotle. Lastly, I wanted to compare them to some of the other companies we've looked at in past videos. We can see that they did not make it onto the share price compared to intrinsic value table, because at the moment they are trading at $1,600 per share, and their intrinsic value per share is estimated to be about $1,000 per share. So that means they're trading at more than 1.55 times their intrinsic value, so they weren't able to make it onto the top 10 list here. ExxonMobil, GE, Albertsons, ConocoPhillips, and Google are the only companies we've looked at over the last 10 to 20 or 30 videos, however many we've looked at since we started doing this, that were trading below intrinsic value, and ExxonMobil is doing the best at the top here. In terms of growth rate, we can see that Chipotle has an estimated growth rate of 24.88% by Yahoo Finance. So that puts them in third place on the top 10 table here for all the companies we've looked at in terms of growth rate, right behind ExxonMobil's 26% and behind GE's 44%. In terms of profitability ratios, we saw they had okay profitability ratios of 20% gross profit and 10% net profit, but that's not good enough to get them onto the table here. We can see that for gross profit margin, Adobe is still doing the best at 89%, Amazon doing the worst at 43%, but they did make it onto the top 10 table. And then for net profitability, Microsoft is doing the best at 36%, and 3M is doing the worst at 16%, but Chipotle's 10% in net profit margin is not good enough to get them onto the board here. However, lastly, we can see that in the stock performance over the last 5 years, Chipotle is doing extraordinarily well. They're up 422% over the 5-year chart here. And that's better than Eli Lilly, Apple, Microsoft, a lot of these tech companies and healthcare companies. So that's pretty impressive. They're pretty competitive to AMD's 600% return and Tesla's 700% return. So pretty impressive stock performance for Chipotle over the last 5 years. They've definitely done a good job returning a ton of value back to shareholders. All in all, comparing them to the rest of the companies we've looked at in past videos, it looks like for stock performance, obviously they're doing really well. Profit margins, not so much. These companies do come from different industries, but I still like to compare them even though they're coming from different industries. And then lastly, right here, we can see that they're not doing good on the intrinsic value table here. They're not trading below intrinsic value similar to these other companies. But in terms of growth rate, they're doing pretty well. They have a higher projected growth rate than a lot of the other companies we've looked at. In terms of comparing them to other companies in their industry, we can see McDonald's is probably doing the best with their profit margins and their dividend payouts. And then lastly, as I pointed out, they're not trading below intrinsic value per share at the moment. Stock performance is doing pretty well, so I'm not too sure what to make of Chipotle. They've done pretty good in terms of stock performance over the last year as well. Let me know in the comment section down below what you guys think of Chipotle. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.